Ladies and gentlemen, listen carefully, because what I'm about to share with you today isn't some clickbait headline. It's reality. We're standing at a defining financial crossroads. And if you own silver, physical or otherwise, you literally have only 3 days to act before the market dynamics shift beneath your feet. This isn't fear-mongering. This is the logic of economics playing out in real time. If you own silver, if you've invested even a small portion of your wealth into it, you need to understand something that most people are completely ignoring. Timing is everything. The financial markets do not operate on your schedule, and opportunities and commodities, especially precious metals, are fleeting. They arrive suddenly and they disappear just as quickly. Right now, we are at one of those critical moments, a point in time where hesitation could be catastrophic. 3 days, maybe less, could be the difference between being positioned correctly to protect and grow your wealth, or watching as the chance slips through your fingers. And yet so many investors are sitting idly, waiting for confirmation, waiting for others to act first, thinking that this time they can afford to wait and see. That thinking is exactly what has caused countless individuals to miss market-defining moves over the decades. Look at the broader economic landscape and ask yourself what has changed. The truth is almost nothing has stabilized. The dollar continues to weaken. Central banks are trapped in policies that expand the money supply while promising stability. Inflation, whether officially reported or hidden in manipulated statistics, remains a threat. Governments are borrowing at record levels, spending beyond their means, and hoping that someone else will absorb the consequences. All of these factors are converging to create conditions that make silver, not stocks, not bonds, not cryptocurrencies, the real safe harbor for wealth. But just knowing this isn't enough. Knowing is only the first step. Action fast, decisive, immediate action is what separates those who benefit from those who regret. 3 days may seem arbitrary to some, but in the financial markets, windows of opportunity are measured in hours, not weeks. You can see it in the pattern. Silver is moving, physical demand is increasing, and futures markets are showing unusual volatility. The market is signaling a shift, but it won't wait for your hesitation. By the time mainstream commentary catches up, by the time social media is flooded with experts validating the trend, the move will already be over. This is the cruel but undeniable truth about timing in markets. If you want to capture gains or protect against risk, you cannot wait for validation. Validation comes too late. You have to act when the logic of economics is clear, not when confirmation arrives from the crowd. And yet so many investors remain paralyzed by fear of being wrong. They say, what if silver doesn't move as expected? Or what if I buy now and it drops tomorrow? That mindset, as understandable as it is, ignores the larger picture. Markets do not punish decisiveness. They punish indecision. The longer you wait to act, the more the market moves around you, the less leverage you have, and the smaller the window of opportunity becomes. Silver isn't like a stock that can be bought at any price and sold tomorrow without consequences. Physical silver requires timing, storage, liquidity, and most importantly, strategy. Miss the moment and you're left watching others capitalize while your potential remains unrealized. 3 days is not a gimmick, it is a warning. The conditions that have aligned to create this surge in silver are transient. They will not remain for long. Consider also human psychology. Investors are notoriously reactive, not proactive. When news breaks, when prices spike, when the mainstream finally notices the first wave of buyers has already positioned themselves, those who hesitate now are placing themselves at the back of the line, chasing momentum rather than capturing it. History shows that the cost of waiting in precious metals is enormous. People look back and say, I should have acted sooner. But they rarely say, I acted too quickly. Timing in commodities rewards decisiveness because these markets respond directly to supply, demand, and geopolitical realities. Forces that are often moving faster than the human mind can process. If you think 3 days is generous, think again. 3 days is a blink in a market that has already started moving. This is not speculation. This is cause and effect. When the fundamentals are aligned, when the dollar is under pressure, inflationary forces are persistent, and investor sentiment is swinging. Assets like silver respond immediately. You cannot argue with the market's timing. It does not negotiate or wait for convenience. If you are sitting on the sidelines, hoping for a better entry point, hoping for a small correction to reduce risk, you are ignoring the one factor that matters most: urgency. The moment has arrived and the clock is ticking. Every hour of delay diminishes your potential. Every second spent debating reduces your advantage. 3 days is all you have to position yourself before the window begins to close. And let's be clear, acting now does not mean reckless buying. It means understanding the dynamics, sizing your position appropriately, and moving decisively. The markets will reward those who act with conviction, not those who are paralyzed by fear or indecision. Silver's value is not hypothetical. It is based on tangible economic forces, scarcity, industrial demand, monetary instability, all of which are accelerating. Ignoring these forces in the hope that might be too late is exactly how ordinary investors fall behind. Timing is not a luxury. It is a requirement. And in this moment, 3 days is all the time you are being given to align yourself with the reality that is unfolding. If you understand the forces at play, if you grasp the urgency, then hesitation is no longer an option. You have to act decisively, intelligently. And now markets do not wait. Silver will not wait. And the opportunity that exists today may vanish faster than you think. Timing is everything. And if you fail to respect it, you risk being left out entirely. 3 days, that is all. The world of finance is not a static place. It moves according to forces most people fail to see and even fewer understand. If you think silver is just a shiny metal, a collectible, or a minor hedge in your portfolio, you are missing the point entirely. Silver is a thermometer. It measures the health of the global economy. And right now, that thermometer is flashing red. What we are witnessing is not some minor fluctuation in markets. It is the direct consequence of decades of monetary mismanagement, excessive debt, and economic policies that ignore reality in favor of short-term comfort. Governments around the world have printed money as if it grows on trees, and central banks have acted as though they can indefinitely prop up an unsustainable system. The result, the foundations of our financial system are weaker than most people are willing to admit, and assets like silver are sounding the alarm. Look at the US dollar, for example. It has been the bedrock of global finance for decades, but that bedrock is cracking. The dollar is losing purchasing power as the Federal Reserve continues to expand the money supply and carry out policies that promise stability but actually undermine it. Every additional $1 trillion in debt, every additional quantitative easing program, every promise of artificially low interest rates chips away at the value of the currency. For those who understand the dynamics, the implications are obvious. Fiat money is not a safe store of value. It never has been. People cling to it because it feels familiar. But familiarity is not a measure of security. The US dollar is weaker today than it was yesterday. And this weakness will accelerate as the global economy faces mounting pressures from debt, deficit spending, and political instability. Silver is directly impacted by this reality. It is not speculative. It is not a bet. It is a tangible asset that responds to economic fundamentals. As currencies weaken and central banks continue to expand the money supply, the purchasing power of paper assets declines. Silver, along with gold, is the natural alternative. It is money in its purest form, a store of value that cannot be printed at will and cannot be devalued overnight. Investors who understand macroeconomic realities recognize that silver is not just an investment. It is a shield. It protects against the erosion of wealth caused by fiscal irresponsibility and monetary manipulation. Yet despite this clarity, most investors remain underexposed. They remain tied to a system that is failing them slowly but steadily under the illusion of stability. While precious metals quietly prepare to absorb the shock that fiat currencies will inevitably deliver, consider industrial demand. Silver is not only a monetary hedge, it is also an essential industrial metal. Electronics, solar panels, medical instruments all require silver. As economies attempt to grow under the weight of enormous debt and systemic inefficiencies, demand for silver and practical applications rises even as supply struggles to keep pace. Mines cannot instantly produce more silver. Extraction is expensive, labor-intensive, and geographically concentrated. When you combine this with the macroeconomic pressures of weak currencies and expanding fiscal deficits, you get a perfect storm. The kind of environment where assets like silver don't just increase in value, they surge. And this surge is not speculative. It is the inevitable consequence of the economic forces that underpin the real world, forces that cannot be printed away, manipulated, or legislated out of existence. The broader picture is even more concerning. Global debt has reached levels that were unimaginable even a decade ago. Countries borrow to maintain spending, while central banks manipulate interest rates to make that borrowing appear sustainable. This creates a false sense of security for the public and for investors who rely on official narratives rather than economic reality. Eventually, the market forces will demand recognition of these truths. Currencies will adjust. Interest rates will normalize. And those who ignored the fundamental imbalances will face losses, not because they misjudged a stock or bond, but because they misunderstood the system itself. Silver, in this context, becomes more than a hedge. It becomes a lifeboat. It represents real value when paper promises collapse. Another critical component of macroeconomic reality is inflation, both visible and hidden. Governments have a long history of manipulating reported inflation statistics but the lived experience of citizens tells the true story. Prices are rising and purchasing power is declining. Every new round of stimulus, every expansion of credit, every artificially low interest rate feeds into this cycle. People who cling to cash are fixed. Income assets are losing ground steadily. While silver stands as a counterweight, it is a reflection of intrinsic value insulated from the artificial distortions that dominate paper-based financial instruments. In short, the economic environment that has been created over decades guarantees that silver will not simply retain its value. It will increasingly become the safe haven that rational investors seek. Finally, one cannot ignore the geopolitical dimension. Currency wars, trade imbalances, and global uncertainty amplify the economic pressures already in play. When central banks respond to crisis by printing money and expanding credit, the ripple effects are felt immediately in commodities. Silver responds to these macroeconomic realities before most paper assets do. It is not reactive, it is proactive. It reflects the truth of economic fundamentals, not the illusion of stability that governments and financial institutions try to project. Those who ignore this reality will find themselves unprepared when the market forces that silver foreshadows arrive. The conclusion is unavoidable. The macroeconomic reality we face today is one of debt currency devaluation and systemic fragility. Silver is not just an optional investment. It is the consequence of understanding this reality and acting accordingly. Those who recognize these forces, who understand the broader economic picture, and who position themselves appropriately now will have the advantage when the system adjusts. Those who wait, who ignore macroeconomic signals, will be left holding assets that have already lost value while opportunities pass by. The question is simply, do you see the reality unfolding? And do you have the courage and the foresight to act? Silver is not waiting, the economy is not pausing, reality is moving, and the time to respond is now. When it comes to silver, there is a delicate balance between opportunity and risk. And most people fail to understand that the two are inseparable. You cannot talk about potential gains without acknowledging the hazards. And you cannot discuss risk without recognizing the extraordinary opportunity at present. Right now, we are living in a period where the scales are tipping dramatically in favor of those who are prepared to act. This is a rare moment in history where timing, insight, and courage intersect. The opportunity is real, but it is fleeting, and the risk is not abstract. It is immediate and unforgiving. Many investors approach silver like a passive asset, something you hold, like a savings account, hoping for slow, steady growth. That is a fatal mistake. Silver is a reactive, volatile, and highly responsive asset, and it rewards decisiveness while punishing hesitation. The opportunity in silver is rooted in several undeniable realities. First, there is the macroeconomic backdrop. Currencies are weakening, debt is exploding, and inflation is eroding purchasing power. These forces have been quietly building for decades, and silver, by its very nature, reacts to them. It is not a derivative. It is tangible, finite, and globally recognized as a store of value. Unlike paper assets, which can be devalued at the stroke of a pen, silver is real. It has intrinsic value. When fiat money falters, when the illusion of stability collapses, silver appreciates because it is understood universally as a safe haven. This is the core of the opportunity, a hedge not just against market fluctuations, but against systemic failure. Those who recognize this now are positioned to benefit not gradually but dramatically as the system corrects itself. Yet opportunity alone is not enough. There is risk, the kind that comes from misjudging timing, overcommitting resources, or misunderstanding the market's movements. Silver does not behave like a traditional investment. It can surge and fall sharply within days, responding to both real economic data and speculative pressures. Investors who fail to manage this volatility expose themselves to losses, not because silver is a bad asset, but because they are unprepared. Risk in silver is not hypothetical. It is immediate. The moment you decide to act, you are taking on both sides of the coin, the chance for gain and the potential for short-term loss. Ignoring this risk, pretending it does not exist, is the surest way to fail. The smart investor does not fear risk. They respect it, they calculate it, they position themselves for it, and they understand that the very forces that create risk also create extraordinary opportunity. This is why timing is crucial. The window to capitalize on silver's current position is limited. We are seeing unusual market dynamics, volatility spikes, shifts in futures contracts, increased physical demand, all indicating that the next big move is imminent. The opportunity is there, but it will not last indefinitely. Those who delay, who wait for the perfect moment, are likely to find themselves on the outside looking in. In financial markets, perfection is an illusion. The reality is that acting with imperfect information at the right time often yields far better results than waiting for certainty that never comes. opportunity and risk are intertwined. And understanding that relationship is the key to making silver work for you rather than against you. Consider the psychology of the crowd. Most investors are reactionary. They chase trends after the fact. Buying high and selling low silver in its current context is a test of contrarian thinking and discipline. The opportunity lies in recognizing the underlying economic realities before the masses do. The risk lies in behaving like the masses, hesitating, procrastinating, or overreacting to short-term price movements. History is full of examples where those who understood the balance of opportunity and risk in commodities like silver walked away with outsized gains, while those who ignored it suffered. This is not theory. It is reality repeated over decades. Timing, understanding, and courage are rewarded. Indecision and complacency are punished. There is also the element of leverage. Silver, unlike many assets, allows for strategic positioning that can amplify both gains and losses. This is where discipline becomes critical. You cannot approach this market recklessly. You cannot buy blindly based on hyper fear. You must assess your exposure, understand the mechanics of physical versus paper, and align your decisions with your risk tolerance and broader financial strategy. The opportunity is amplified by these same risks. If you act intelligently, you can achieve extraordinary returns. If you act carelessly, the losses can be just as dramatic. This is the double-edged nature of silver. It rewards the prepared and punishes the unprepared, often with startling speed. Finally, consider the long-term implications. The opportunity is not just about short-term profits, though those can be significant. It is about positioning yourself in a world where fiat currencies are weakening, debt is unsustainable, and financial systems are under stress. Silver offers protection against systemic risk while simultaneously providing the potential for substantial appreciation. Risk and opportunity coexist because the world is uncertain, and uncertainty always carries both danger and potential reward. The investor who understands this does not panic when the price fluctuates. They do not wait for validation from others. They understand that risk is a necessary companion to opportunity, and that only by acknowledging both can they navigate the market successfully. The choice is yours. You can ignore the signals, treat silver like a minor optional asset, and hope for the best. Or you can recognize the reality of the current environment, a finite window of opportunity, unprecedented economic pressure in a market that will not wait for indecision, acting decisively intelligently, and with full awareness of both the potential gains and inherent risks is the only path forward. Opportunity and risk are inseparable. Those who grasp this, who act with clarity and urgency, will find themselves rewarded. Those who do not will be left watching, regretting the moments they wasted while the market moved on without them. Silver is speaking. Now, the question is, are you listening? So here's what you must understand before you click off this video. Action today matters more than analysis tomorrow. 3 days and this window will start to close. If you think you have time to wait and watch, you're not preparing, you're procrastinating, opportunity doesn't announce itself again, just because you hit snooze, decide, act, position yourself wisely, urgently, and with eyes wide open. Because in markets like these, hesitation doesn't just cost profits. It costs opportunities that never come back.